Yo, how's it going, everybody? Welcome to TrendSpider Live. My name is Mike, and today we are joined again with Rich from TradingWarz. How are you doing today, Rich?
I'm good. A little bit nervous for Amazon earnings. I have over 2,000 shares, so it's going to
Yeah,
be a fun one for me.
yeah, absolutely. Real quick, before we show off the intraday chart action, let's go and take a look at the weekly and the daily here. I know you had some fibs that we drew. We were talking a little
Yeah.
bit beforehand. For everyone out there in the chat, welcome. By the way, let us know if you guys are also in Amazon. We're curious to know. But let's start with a top-down analysis here. Let's start maybe on like the monthly chart.
Yeah. I can walk you guys through. So in April of last year, when the market was pulling back, I drew up this Fibonacci. I posted it April 5th on X, and I was expecting Amazon to bottom at 162, the 50% retracement. That's halfway from 2023 to the high of 2025, going into the April pullback. So I ended up picking up 2,282 shares. I didn't get everything at 16 in the 160s. My average is 175. And I've been holding those shares since. And my long-term target for Amazon is at least to get to the 1.618 extension. We have that, it's right around 350, 340 above.
Yeah,
And that will basically, I'll basically double my return. So right now I'm up about 100K on Amazon. I put in 400K in capital. So it's not, it's not been the best return, to be honest. There's been companies that have really outperformed, like Nvidia and AMD and even Hood before this big pullback had outperformed. So a little bit frustrated, but what I've been doing is selling some covered calls. So I sold a $5,000 worth of the 260 calls earlier last month. So even if we pull back today, I'll still make some money on those covered calls. But
yeah.
if we get back down to my average price of 175, I'll be honest, I will consider actually just killing the position. But I'm here for it, and I want it to go up, and I believe in the company, so here for the ride.
Yeah, absolutely. So we have these fibs already drawn, but real quick for the people out there that maybe don't know that much about fibs, I'm going to go ahead and just redraw them so you guys know just how, pretty easy it is to go ahead and get these levels on your chart if you're on TrendSpider. So basically, you go over here to the left and you click this draw fibs tool. And then remind me, Rich, we're going from this high
So we're gonna
right
go
up.
we're gonna go from the 2023 low to that high, which was the April, Liberation Day pullback that
Right.
happened, right? So that's where I picked those up in April, right on that little hammer bar as it was forming. So
This one
that
right
was
here.
a good play there, and we have unfortunately I didn't get everything in the 160s though. I wanted to be close to 165, 167. I ended up at 175. But during that time, there was a lot of fear in the market. So it was hard to just pull the trigger on something that large.
Yeah, definitely. And to your point, Amazon has not been doing very well compared to some of the other names. I mean, recently, like we've seen Microsoft sell off, we've seen AMD sell off, but if you look at the relative performance indicator down here, Amazon's pretty low. It's sitting at 38, which means it's only outperforming 38% of the S&P 500, which is not very good, especially coming into earnings. Like if we look at some other stocks, like what has good high RP today, Nvidia, like even a lot of these stocks starting to break down. Like Nvidia just dropped down to 61. It was recently like 90. If you go look at some of the stronger names like MU, you can see they're outperforming basically the entire market here at like 99%, which is interesting. But yeah, great fib levels here. And also, I just real quick want to show you guys, I use Sidekick to go ahead and analyze these fib levels as well. After I had them drawn on my chart, I just prompted Sidekick to basically read my chart and analyze them. If you guys didn't know, Sidekick is TrendSpider's AI, and it can read your charts. It can read the fibs on them. And it says, basically, watch for that 786 level at 207 as your next meaningful support if 220 fails. And if we can see right here, you can see it right there. That 786 level is the next, of course, line of support on these Fibonacci levels. So pretty cool insight there, I think, from AI, especially if you're new. You don't know exactly what you're looking at. And also, Amazon dropped a little bit today, quite a bit, had a
Yeah.
gap down. I was looking for recent news, talking to Rich about it beforehand, and there wasn't much, you know, it was just an overall broader tech sell off. It's saying, of course, earnings and anxiety as well is another thing. So it'll be
I
interesting.
definitely think we're seeing rotation in the market. A lot of tech, a lot of assets in the financial sector are rallying a little bit. So that's normal to see that type of rotation, honestly speaking. But Amazon has a mind of its own, because even during the rally that we've had on some of these names, it refused to really squeeze. After, so that last gap you see was the earnings gap, where we gapped up. That was about
Right.
15%, and that was $60,000 for me in one day, and I was pretty happy. I was like, hey, you know, this thing is finally gonna move, but it gave it all back. So it's kind of frustrating holding the shares, but the good thing is, if you have shares of a company, selling covered calls on your position to get some extra income, you know, it's good. It'll help you out.
Yeah.
So that's what I've been doing to kind of comfort it. But when we wrapped up that 15% gap fill there, I was kind of surprised that we actually gave back that earnings. Because we'll see how this earnings go, but you know, that 15% gap I was thinking was going to be the start of a bigger rally. But that's how the market goes sometimes.
Yeah. Now, if we go look at the monthly again here, you can see, you know, it had what looked like a breakout, and then it instantly kind of gave it back, you know, kind of a fake out type of move, and kind of started chopping again, which is unfortunate. But, you know, exactly like what you said, that's what the market does. And now,
It's
interesting enough,
still definitely holding up stronger compared to some of the other stocks, like Microsoft, like you were talking about.
yeah,
Which I used to be a big Microsoft shareholder, and I got out of it to put more into Amazon. So I'm really happy I made that choice, because
good.
Microsoft is supposed to be the safe stock, you know, that pays you dividends and it doesn't really move too crazy. But this has been a pretty big disaster on Microsoft, I would say.
Yeah. Yeah. It's interesting on Microsoft. They were like head honcho, you know, they had all that
Yep.
money with OpenAI, and then Google just came in with Gemini, and just, you know, the
Mhm.
AI world is just constantly
Yeah.
evolving. And Google's
And
really
I
kind
got
of,
I got a little bit lucky with Google, because I bought Leaps on the April pullback, and that's my best performing Leaps position. I hit over 420%, which got a little bit of luck there, but
there you go.
thankfully I played the Google side of the game, and I'm really impressed with Gemini. So, and what they're doing
It's,
in AI and everything, I think they're here to play the game.
yeah. And yeah, the main thing is OpenAI is just kind of failing, honestly. Like Gemini
Hmm.
is pulling ahead, and ChatGPT, OpenAI is just, yeah, it was the king, and now definitely Gemini is really, really pulling through. You know, they have the partnership with Apple. They're going to be partnering Siri, and I mean, honestly, all their tools are just insane. Like Gemini,
Yeah,
the AI
and I actually
Studio.
use Gemini to analyze my portfolio. I can literally put screenshots of Interactive Brokers, my portfolio, and it will give me, you know, ideas to make more money,
Yeah,
to manage my risk, which is pretty cool.
yeah, you could do that in Sidekick too. We actually have
Okay.
Gemini in here.
Okay, cool, cool. Okay.
Yeah, and if you
I
actually
gotta try that
have
out.
a watch list of your portfolio, like for example, I can add a watch list over here to my left-hand sidebar,
Hmm.
whatever it is, like
Hmm.
social tickers, I'll just say. I can just say, analyze my current portfolio and let me know what you think. Break it down by sector. Also, this is on Claude. Claude is really good. Let's check out Gemini though, because we have Gemini 3 Pro now. And then once you
Okay.
type portfolio, it's going to say, what's your portfolio? And you're just going to pick a watch list. Just give it a second there. Let's pull up Amazon on the intraday charts while we wait. Because we also have your Auto Fibonacci tools. Here we go. So I'm
Yeah.
going to pick, let's do social tickers as the list. Hide that for now. And then, yeah, you guys, if you guys want to check out Rich's custom TrendSpider indicators, the Auto Fibonacci levels, you can check them out using the link down below. But this is what it does. It automatically paints the Fibonacci levels from intraday highs and lows on your chart for you automatically, which is very cool. You can see them printed right here on Amazon. And
Yep.
yeah, nice rejection off the 78.6% level intraday here, Rich. I know you said you took
Yeah,
a
yeah.
trade on that,
When
right?
it comes to day trading, that 78.6 level is one of the best levels. You can also see right now on the bullish side, we're holding that level too.
Yeah.
Um, because it's basically 79% discount of the range, right? So that's where you're going to get your best deal, near the bottom of the range to go long and near the top of the range to go short, right? And that's why I love to focus on that area. I have a whole strategy just built around that 78.6 number. And you can get it on daily charts and weekly charts as well. As a matter of fact, SPY had this exact same setup off of the 786. That was something I was talking about today. And you just got to get a good deal, right? If you want to short, you don't want to short at the bottom, you know, like that's not going to give you a good risk to reward. The 78.6 line is that's the easy money, because you have a tight stop loss. You know, worst case scenario, you risk off the high of the day. And I think this one's probably like a 2x or 3x trade. With futures contracts, you could definitely make maybe 20, 30 points on that play.
Yeah, no, especially on the futures. And real quick here, I just want to show you guys what it did on this portfolio breakdown. I just give it a list and told to break it down by sector, and it did exactly that. Gives you a performance snapshot. You can ask for it, you know, to do whatever you want, but it just, you know, it builds out charts for you. You can do a lot of stuff. You can ask it, you know, follow-up questions like, what could I remove or add in my portfolio to make it better? It gives you stuff like beta exposure. This one, for example, had ARC-Coin and Tesla. It's like that together gives you a high beta cluster. And just, yeah, it's very cool to use. Like, I'm sure you said you use Gemini to analyze your portfolio. So
yeah, I use it a lot. I sell a lot of options, especially strangles on the S&P. And it's really helped me with managing my deltas, managing the gamma risk, and the size that I need to do. So it was been really helpful. Actually, it really changed the game for me. Honestly, AI has really changed the game. So
yeah,
I'm happy that I actually use it.
I cannot wait for us to have options data, and then the ability to use Sidekick to help you pick strikes and, you know, manage, like, decide where to roll and stuff. I'm super excited. I'm going to be building custom indicators for it for sure, you know, based on option levels. So I'm super hyped for that. Don't know exactly when it's coming out, but it is in the list of things that is coming out sooner than later. So definitely fun.
I think from this chart, we could see that the bears placed their bets. They shorted the 225 area, the 786 bear, and the bulls are placing their bet too at the 221.65. So I feel like if you look at this chart, you can see the algos are placing bets at the good sides of the range. You know, no one's fighting to short at the low of the day. No one's fighting to go long at the long of the day, and at the high of the day. And I think a lot of retail traders get obsessed with that because of FOMO, you know, and that's eventually, because the risk to reward is so bad when you buy at the high or you sell at the low, it'll lead to you blowing up. So I really hope that these indicators, it'll keep people, like, you know, play the levels. Don't chase anything. You know, if you want a deal, if you want to buy the dip, buy it on the 786. You want to short it on the 786 or the bear side. Don't get caught in the middle, because that's where you can lose a lot.
Yeah, for sure. Yep, 100%. And look, we got 3 minutes until the market closes here, going into Amazon earnings. Let's take a look at what Sidekick guys say about Amazon earnings, what's expected numbers wise. So let's see. Oh no, that was the Fibonacci analysis. Here we go. Amazon earnings. I already sent this prompt in before the stream. I just said, analyze the upcoming Amazon earnings today. As you can see, we see an expected EPS about $1.97 per share. Revenue estimate around $211 billion. Recent news, of course, you know, everyone's heard about these Amazon layoffs. You know, they confirmed a ton of job cuts within the last couple of weeks. Apparently, they're actually in talks to invest $50 billion into OpenAI alongside NVIDIA and Microsoft, which is a little bit interesting. And let's see. Sidekick is saying hold. I told it to give us a buy, sell, or hold rating going into earnings. And then I like to reprompt it after earnings and see if it changes. But right now it's saying hold going into earnings. And saying wait for guidance, of course. It's, you know, makes sense. You know, wait to see how the forward guidance is for Amazon. Saying the risk to reward is a little bit balanced here. Underperformed the MAG 7 in 2025. So yeah, we'll see how it holds up. Again, earnings past this earnings season haven't been holding up super hot, as we've seen with Microsoft and AMD and some other names, but Yeah, let's take a look at what else is reporting today too. Or yeah, we got actually 1 minute to the market closes. Amazon should be out. The numbers should be out in just a couple of minutes. So we'll go up to the 1 minute and maybe we can catch this reaction in a live right here on Amazon before we take a look. I know, Rich, you're probably pretty anxious going into this. There's the bell.
Yeah, I am definitely anxious, but I sold those calls. If we do drop here, at least I have those to give me a little bit of comfort. But
absolutely,
I really hope this year Amazon can really start to pick up some steam.
Yeah, and we'll see pretty shortly what's going to happen. Pretty shortly. We'll wait here for the numbers to drop. It should be in about less than a minute now. So if you guys are out there in the chat, for one, make sure you guys like and subscribe. We're about to watch Amazon probably move up or down quite a bit on these EPS and revenue numbers. Also, make sure to check out Rich's, X and whatnot in the description below. Give him some love. He has some pretty sick indicators here. Yeah. Let's see. Are you in a longer term covered calls? Or are they like weeklies?
Yeah. So the shares that I have about 2,282. And then the calls that I sold are February 20th. So,
oh wow,
there we go.
We're getting some crazy movement back and forth here. Numbers are likely
give me a heart attack.
I know, this is insane. Man, that's a big range. Looks like heading down, if anything. We have this after hours change percent indicator that I can stick on. Whoops. Currently down about 1%, or God, it just keeps flying around. Currently down a bit. Let's see if those numbers are out. Not seeing them yet. Let me check over here. Then keep refreshing this news widget. It seems like it cannot pick a direction though. It looks like it's down about 2%, which is actually not that crazy in the after hours.
Yeah, I think it was down 4% on the day. So
yeah, true.
Or let's see.
Let me see where this ends up. Looks like it's might be holding on the downside, but we have seen, when the earnings call comes on, some pretty big reversals.
Especially on the outlook, and when the company talks about the outlook and all that.
Yep, absolutely.
You can definitely see a flip, but let me see if I can look at my covered calls. That'll make me feel a little bit better.
Yeah. Okay. EPS missed and sales beat. I'm seeing a 1.95 EPS, missing the 1.97 estimate, and then sales beating by about $2 billion. So half beat here on Amazon. That is interesting. Very important stuff to look out for also is the guidance, which I'm not seeing anything of yet. But Amazon down about 8% or so, 7% in the after hours session. What are you guys seeing out there in the chat? Let us know. Some people, IREN is reporting today as well. They're saying it's up pretty good. IREN, I'm seeing up about 5% or so on the day. Congrats to the IREN bulls out there. And MicroStrategy, another big one. Who else is watching Bitcoin and MicroStrategy? Not seeing anything moving on MicroStrategy quite yet. Go back to Amazon real quick. Yeah, so
that's like a 12, that's like a 13-14% swing within 1 day on Amazon, which is pretty intense.
For a company as big as Amazon, that is honestly insane.
I definitely think the broader market has a lot to play with it too, with what's going on with all the selling we've been seeing. A lot of selling we've been seeing. So I wonder how the S&P is going to handle this as well, because with another Mag 7 taking a hit, if the S&P is going to be able to withstand, because if we start to see the S&P 500 and the NASDAQ pull back, it could be pretty brutal.
Yeah, we have a lot of stocks selling off. SPY, had a pretty gnarly day today, but it's still, you guys, like, what, 3% off the all-time high. So Nothing crazy there. Let's take a look at the 5-minute here. Yeah, Amazon, pretty brutal in this after-hour session, down almost 10%, you guys. Holy moly, what a brutal candle on Amazon. That is not the greatest confidence builder here for the overall market, like Rich was just saying.
Yeah. We had Microsoft fail. Now we're seeing Amazon with some, well, let's see, you know, there's still guidance stuff that can come out. Let's see what happens, but
Yep.
is a very strong pullback. I wonder if we go back to the monthly chart here, what we can see in terms of potential dip buys if anybody's looking.
We're at the monthly here on Amazon. We hit about 200. Let's see.
Definitely think that 200 level is a psychological level. If that doesn't hold, you can definitely pull back a lot more. So that's important.
Yeah. Yeah, so we will open right around here, which is, yeah, like you said, psychological. There's a couple wicks holding it right there. And yeah, the next step down would be that 618 level. So yeah, it'll be interesting there. See how that ends up playing out. And we'll see if anything comes out. Looks like guidance came in for Amazon just about in line, 173 to 178 billion, maybe a little bit higher than anticipated, which is good for revenues. See if there's any other news other than that. Yeah, no, it's a decent guidance, but yeah, that EPS miss, that was one of their first EPS misses since like 2022.
Yeah.
Kind of crazy, actually. Oh yeah, Reddit's out too. Let's take a look at Reddit. Oh wow, Reddit is actually up. Interesting enough, with how brutal software has been. I guess it's a little bit different. Reddit there, it's more like social and marketing, but still, yeah, up about 10% on Reddit. What are the numbers on Reddit? Not seeing them quite yet, but they sure look like they are out. If you guys are out there just joining in, make sure you guys hit the like button and subscribe if you are enjoying this live session so far. Also, if you want free trade ideas sent to your inbox every single Sunday, sign up for the free TrendSpider newsletter using the link down below in the description. You can drop it below in the chats as well for you guys. Drops every single Sunday for free. Wow. Yeah, Reddit absolutely popping right now. Take a look. Still not seeing numbers. I think IREN up about 6%. Let's see, Microsoft.
I know there's been a lot of people that have been holding IREN, so congrats.
Yeah, yeah. It has been not the greatest.
Like one of the most talked about names I think on X I've seen for sure.
Yeah. No, there's a lot of IREN bulls out there. It's sitting above, as you can see, these 2021 highs. Lately, the price action has been a little bit iffy. Revenue growth is very nice, but yeah, today in the after-hour session up 6%. So congrats to anybody diamond handing IREN. Not seeing numbers for that one yet, but it's looking pretty good. MicroStrategy hasn't really moved at all yet. Let me see when that one's supposed to come out, because you know, Bitcoin has been absolutely tanking recently. So
I wonder if it's out yet for MicroStrategy. That
it should be. It should be, but I'm not seeing the numbers in yet.
If not, that'll literally be one of the greatest option premium destruction.
Yeah, yeah, absolutely.
Volatility crush.
Yeah. Yeah. Amazon's out. Let's check MicroStrategy. I'm not seeing them yet. They should have dropped along with Amazon. You know, this happens every once in a while from MicroStrategy or just earnings in general. Oh, Roblox was actually today as well. Roblox. Haven't really looked at Roblox in quite a while, but look at that, up 23% on the day. Our nice move indicator. And that one has been beat down. Let's go look in the daily, you know, beat down, but it's really just back up to, it looks like a resistance level there on Roblox. But let's take a look to see if those numbers are appearing here. Still not seeing Roblox numbers. Let's check over here. Yeah, not seeing Roblox. FTNT and Affirm are out today as well. Fortinet looks like it's up. Second here. Up pretty good in the after-hour session for FTNT. Again, another one that used to be pretty big on social media, up 8%. What else we got? BE. This is an energy company. If, you know, I've been keeping an eye on energy. XLE has been looking pretty good. BE has an interesting setup here. As you can see, it's recently hit all-time high. It looks like it's dropping below that recent pivot level that it broke above, which is interesting on BE, but it's up, you know, a little over 1% in the after-hour session. Again, not seeing any numbers yet for this one. What else do we got? What else are you guys seeing out there? Let's take a look at Affirm. If you guys are just joining in, welcome. Make sure to like this video and subscribe for future lives. Affirm up pretty good.
I wonder if anything changed on the MSTR. I don't know. Still,
yeah,
same spot.
People seem to be eagerly waiting for MSTR. So I'm going to start a poll. Let's see. Does MSTR beat earnings? Yes or no? If you're on YouTube, you can vote yes or no. Does MicroStrategy beat earnings? Let's say a double beat, EPS and revenue. And also, if you just think if MicroStrategy is going to move up, vote yes. You already got some votes in. Almost nobody is voting yes.
Wow.
80%.
How much is it down from highs? It's like 70% or something crazy, right?
It's an insane
yeah,
amount.
One of the craziest pullbacks I've ever seen.
Yeah,
wow.
80%. And it still has so much more it could potentially fall, but wow, 80% off the highs. And we're seeing this clear pivot level. Everyone sees this. Don't need to be a genius to see this level right here, you know, at like, what is this, like 110 or so. It was the previous 2021 high, reacted multiple times here in 2024, and now we're sitting right there at 110. So that will be a big one to watch, and currently just right below it. Let's see. You guys are seeing numbers in for MicroStrategy. Bitcoin is dumping. Why would an MSTR pump? Yeah, no, good. Why would it? Yeah. Even when MicroStrategy was pumping, or when Bitcoin was pumping,
yeah, it wasn't relative 1-to-1. Yep.
Yeah.
I see some buyers stepping in on the 200 area.
On Amazon, right? Yeah.
Yeah.
So yeah, Amazon's actually holding in there kind of nice.
So 6.7 after hours and a total of probably like 11% on the day, right? Because you're 4% already down earlier. So that's I'm looking on the right of your watch list. So I think that's the total percentage, right? 10.8 or 10.11 right there.
Yep.
Yeah. So that's including the after hours move. Okay.
Yep.
And it is what it is. It's been tough being an Amazon shareholder. I'll say that for sure. But
yeah,
that being said, let's see, you know, it's possible if this thing can go red to green in a few months, it's possible. Right. Just like the earnings last time was up 15% and it filled the gap. Let's see if it can fill this gap.
Yeah, absolutely.
There definitely will be a gap tomorrow though, for sure.
No, absolutely. Yeah. Oh, that'd be crazy. It'd be a double gap, but IREN having some crazy movements. People are in the chat are pointing out.
I thought it was up 6%.
It was. Yeah. And now it's basically flat. You can see it's literally flat. It dumped for a second there. It was down at one point like 9%.
Classic option killing price action here.
Yeah. So, you know, option sellers should be pretty happy if it opens tomorrow like this, you know, basically 100% flat. Absolute roller coaster here on IREN. Let's see. What are you guys seeing out there in the chat? Let us know. Almost everybody has said that MicroStrategy is not beating earnings. So I'll end that poll. For everybody just joining in that is curious, Amazon did have a half beat. They missed EPS but beat sales, and they're down about 6%, which is not that bad compared to where it was. They bounced off 200 relatively nicely, and they're reacting against this 78.6 fib level from the monthly. See what else we got. Yeah, Snap was another brutal one today. Let's see. People are talking about IREN Hood, Palantir. Take a look at IREN again here. IREN back down about 5%.
Wow, what a roller coaster.
I know, insane.
Wait, saying 17%? That can't be right.
That was pre-market apparently. If you go to the daily on this indicator,
okay.
yeah, it was pre-market. Was it down?
It's
like
a pretty cool indicator.
Yeah, it was a custom one that someone built named Rock Reagan. Had him on a live like last week. But I think, yeah, that was the pre-market that I was saying. Yeah, it was actually kind of beat up in pre-market a little bit, 8%.
That's not good to see a red to green flip like, sorry, a green to red flip like that. Hopefully it can stabilize for those investors. That's that's a rough one.
Absolutely a rough one.
It's been rough. There's been a lot of rough earnings, man. It's been tough this season.
Really has. Yeah, there hasn't been a whole lot of good earnings that have came out. I mean, numbers wise have been decent, but movement, has been pretty brutal. At least for like these big tech names mostly. Let's see how Reddit's hanging in. Reddit's hanging in there. Hit 168 at one point, but now it's down back up. It's up about 4% in after hours. Not too bad. Holding up, interesting enough, better than most names for Reddit here. What else? We had a firm. Let's take a look. If you guys are out there in the chat, you guys see any big movements happening, let us know what tickers you guys are watching. Curious to know. Let's see. Yeah, Roblox. Roblox was pumping. Wow, Roblox came out of nowhere, up 20%. But hopefully,
it looks like it was getting pretty beat up on the daily there. I wonder.
Yeah,
that looks like a 786 fib level to me.
It might be from where
from
were
the
you
last
thinking?
swing low.
Let's see. From like here to there.
Yeah, I think so. Oh, you gotta flip it.
Yeah, I'll flip it.
You gotta go the other way. Yeah.
What we can do is, I think you can.
Is there a flip button?
There should be. I thought there was visible top right. Oh, maybe there wasn't. Yeah. Anyway, I can just redraw it. So go from high to low.
So a little bit deeper. That's probably that's like 80% of the way back. That's pretty crazy.
Yeah, if you go like down here, down there. Yeah, it's breaking a lot of these key fibs for
a lot of times with the fibs, you want to see it actually do something on the level, like actually react. And because a lot of people, you just buy it blindly, but you got to see it do something,
Yeah, absolutely.
Actually, go on the daily chart. Where were the anchors you had there? Because that was a reaction, I think, off 76. What was that react? Where were your anchors there?
Yeah, so this one I was just messing around. I drew it from this October low to the high. And so that is what, a 78.6. Yeah, it's 60.
And then if you go to the daily chart, it's showing the after hours flip.
Yeah.
I see. Okay. I see. Okay. So I think that'll be definitely a key pivot point now for the rest of the year for Roblox. If that level doesn't hold, what is it, around $61? If that doesn't hold, it could definitely pull back a lot more. But there's your pivot right there. Play off of that for the rest of the year.
Yeah. Yeah. Nice bounce off of that. That is crazy. It's just straight roller coaster up and roller coaster right back down.
It's been like that for a lot of stocks, unfortunately. Even like Hood, some of these names, we've been seeing like this vertical move and then a vertical move back down. So it's been pretty intense.
Yeah, Hood is coming back down. So what is this? The February high pretty soon, it looks like. You can draw some fibs here.
I mean, I'm pretty sure people are watching that February high as a retest level. A lot of people are probably waiting for that retest.
Absolutely. Let's see.
Well, one thing that I'm looking at actually is tomorrow on some of these beat up names, I'm looking for some leap puts, especially after earnings gap. And you get paid pretty well to sell puts that are 1 or 2 years out. There's a lot of premium that is that's a part of theta decay. So you can collect a good bit if you're willing to get some of these companies at lower prices.
Yeah.
So I'll take a look tomorrow and see what's making sense. But I think that's one thing people can do in earnings seasons. Things are going rough, you know, on companies you want to buy. You could sell some of these puts, get a few $1,000s in premium, and then you could do whatever you want with the premium. You could keep it, or you could start to buy some shares, and that's like
True.
your typical risk reversal setup.
Yeah. Yep. And I did see MicroStrategy earnings come in right now.
Mm.
EPS big beat, 16.37 beating 10.96. Sales 122.9 million beating 118 million estimate. So a pretty solid double beat. But again, just flat in after hours, not really moving. Nobody has confidence in Sailor right now. Tweeted HODL today. It's kind of funny, as Bitcoin was just, cratering. Let's take a look at Bitcoin, see if Bitcoin is moving at all to this. Yeah, we see Bitcoin here is just having a terrible, terrible time.
Wow.
One of the nastiest days in recent memory here for Bitcoin, about 14%. Wow. Yeah, so not great for the crypto bros right now, unfortunately. Let's take a look at IREN. IREN down 14, 15%. Numbers came in. EPS, huge miss. Lost 52 cents a share. They were expected to miss only 14 cents. And sales, big miss also. 184 million came in, and they were expected at 228 million. So actually a normal move here. And they had a bad earnings report, and they're coming down. Now, you don't see it all the time. Sometimes you see these double beats and the stock moves down and vice versa. So
what's that pullback from highs now?
let's take a look on IREN.
For anybody looking for a dip buy.
Down about 56%. And yeah, if we take a look maybe at some fibs, we'll go all the way out to the monthly here. Might be able to draw some interesting fibs here.
It feels like there's a lot of I think your chart might be I wonder if it's like on log scale or whatnot. Yeah, there you go. Okay, I was like, yeah, that doesn't look right. Yeah, there you go. 50% retracement right there.
Yeah.
That
is 50%.
I would be eyeing that 618. What's that number on the 618 there?
That's 47.90, and currently,
no. I think it's the other way again. The other way, it would be the 618 would be lower than the 50. So yeah, I think we would gotta flip it again.
I swear.
Reverse. Oh, click reverse. I think there's reverse right there.
Yeah,
there you go.
That's why I swear is in reverse. Like, I swear I'm drawing these the other way.
Yeah.
Here, let me turn off this other indicator. It's kind of in the way. But yeah, 618 at 30 bucks. Yeah,
$30, and that actually kind of lines up with that open, the first candle. I guess when they IPO'd, it'll be kind of a retest of that level too. Yeah. I think that's definitely a little sweet spot if anybody's looking. Yeah, but right now with that type of monthly candle, I'd be very cautious.
Yeah, and we're coming to see it on the daily with the after hours move in. It's not too far. We're at 35. So, coming down to some key levels right here on IREN. But yeah, unfortunate. It was, trending up pretty nicely since December, couple months, and earnings took it right back. Not a good earnings report either for IREN, but it's a growth company. That's what you got to expect if you're trading these smaller, newer companies. There's not even much data. This thing went live. Well, it's been around since 2021 now, a few years, but
the funny thing is last year, starting in February, we started to pull back, and then we had a little bit of a dead cat bounce, pulled back further in April. I hope that's not the same thing that happens again this year, but February's have been really bad for the market.
Yeah, not much seasonality data there in IREN, but if we look at SPY, we do have seasonality. And yeah, after over 22 years, it's been pretty bad for SPY. 55% of the time.
I saw that stat today. Yeah.
Meaning average change only about 0.2% green, and 45% of the time over the last 22 years, SPY has been red. Let's go back to like 10 years maybe or something like that.
I
See.
see Robert in the
Oof.
chat. What's going on, brother? How you doing, Robert?
What up? What up?
Yeah.
Yeah, look at this
February.
one. February, 36%. Terrible seasonality for SPY.
I honestly think if the S&P 500 starts to drop, we're only down maybe 2%, 1 or 2% from highs on the S&P. If the S&P starts to drop and the Nasdaq start to drop, we're going to see a pretty bad bloodbath, because the broader market has been alive, even with what's going on with metals and Bitcoin. So hopefully it can stabilize.
Yeah. Yeah, and see here, this is kind of an interesting trend line that was drawn by somebody here at TrendSpider that we're breaking down below on SPY right now. So yeah, overall market has been pretty bearish. Again, not that much down from the highs, but still not the greatest looking trend.
I think a lot of people were talking about the markets pulling back and everything, but remember last year SPY was down 20% from highs.
Right. Yeah.
Right. So if that happens again this year, what's really going to happen to these growth companies? Like, are they going to go negative? Because we're only down 2% from highs. So we need to see the index stabilize here, or we could possibly see the same thing as last year. I hope not. I really do hope not. But some of these tech earnings like Microsoft, Amazon, etc., a lot of times they come and save the market, but I haven't seen anything so far with the Mag 7.
Yeah, nothing much at all. And look at Reddit, green to red. It was flying. Now it's red. So all these pops in the market just not been holding up.
That does not look good.
Someone said BE exploding, an energy company. Yeah. BE right back above this key pivot level. Energy has been a really good sector to watch out for lately. Like XLE, a lot of these energy companies, and BE is definitely up there, and it's really been testing this 148 pivot level quite a bit, and sitting right at it right now. Pretty extended. But if you look at XLE, pretty nice all-time high breakout on energy names. Bless you.
Thank you. I think it's pretty interesting, like on Amazon and on SPY, and we saw on the 5-minute chart going into the end of the day, like if we had with the indicators when we were looking at it, we saw, like these algorithms stepping in on those, that you see the 786 line right there, and then after hours piercing through the high, it was literally running stop losses and just flipping. So you see the manipulation that happens, running stop losses, running all that, flushing everything out, and then turning around. So a lot of times you'll see that type of price action. That's one of the reasons why I really love to sell options a lot more these days, because it's more on the index rather than stocks, because stocks are just never know. You never know. The index, you don't have to worry about earnings as much compared to some of these stocks.
Yeah, no, for sure. A little bit less juicy premiums in the indexes, but hell of a lot more stable.
Exactly. And I think for people that are looking, the futures options, that's what I trade. The futures options, they're very capital efficient. For $500 in margin, you can make $25 a week selling spreads. So because it's leveraged, right? So I think anyone with a small account should definitely look into that.
Yeah, I used to sell MES futures myself, so I'd 100% agree. There's also
nice
tax benefits.
It's 60/40 tax split, long-term, short-term. It's a big advantage, especially if you're selling options, because you don't want to get a big tax bill at the end of the year after you collected all that premium.
Exactly. It does really help, 100%. And also mark to market, which is just generally better for trading. You don't have to worry about wash sales and stuff like that.
Oh yeah,
which can be a little interesting on trading equities and stuff. But MicroStrategy, people are asking if it's dead. I mean, it's not really going anywhere, to be honest. They had a pretty good earnings beat, but it's honestly, I mean, didn't go anywhere. I think a lot of people are probably buying options, expecting a big move on MicroStrategy,
Yeah, I
especially
think
with
this was
Bitcoin.
a classic volatility crush.
Oh yeah, yeah. The option sellers are going to be real happy on MicroStrategy tomorrow. Let's take a
And
look at
I don't think a
Bitcoin.
lot of people probably ended up buying calls thinking that, hey, stock is beat up, you know, how
Right.
much lower can it go? But that's the problem when you do short term. Short term, it's hard to make it work in the exact time you need it to work. So whenever I do calls, I always go leaps to give yourself enough time.
Yep. Yeah. Yeah. Someone made a pretty good point, Mark, out there in the chat. He said Bitcoin has to go up for MSTR to move up. And yeah, I mean, they couldn't have picked a worse time to report earnings with Bitcoin down like 14% on the day. Like, it's not much. I mean, I'm surprised at how well it's holding up.
Yeah, let's see what happens when the futures market open back at 6 p.m. We'll see
Yeah.
if people start panicking after hours.
Yeah, 100%. It'll be very, very interesting to see. What
I
else do we
have
have? Or go ahead.
tomorrow for the S&P 500. I have 30 puts expiring and 50 calls. The call side, I'm good on. The put side,
Oh,
I'm
yeah.
good on for now. But I do have some puts that I sold for next week that are a little bit underwater right now. So we'll see if I get assigned on some of these plays or not. But I always think in my head, if I get assigned on the S&P 500, I have to hold S&P 500. I don't mind that. You know,
Yeah.
individual stocks, you just never know. You just never know what's coming down the pipeline.
Yeah. I mean, if you're going to get assigned on anything, I think SPY is the one thing where it's like, all right, it could be much worse than getting assigned
Yeah,
on some
yeah,
SPY. Like,
I agree.
Amazon, yeah, it's trying to hold that 208, but it's looks like they're just waiting probably for the earnings call. Looks like we see AWS growth hits fastest rate in 3 years, capex of 200 billion in 2026, which is interesting. Let's take a look at what Sidekick has to say now that earnings have actually reported. Where is my Sidekick? There it is. Let's see. So now that earnings have come out, I'm going to reprompt Sidekick with this. Basically just saying Amazon, or just analyze Amazon's earnings announcement. Its take was hold before earnings, wait for guidance. Some guidance has come in, so we'll see what happens. Yeah, Amazon hit on half good numbers. You know, the EPS did have a little miss, but we'll see what Psyche has to say here. Again, Amazon numbers for those of you that missed it so far. EPS miss just slightly, and then sales beat. Let's see. Here we go. We have it visualized right here by Sidekick. Reported at $1.95, estimated at $1.97. Still grew over year from Q4. And then revenue, you can see right here, a little bit higher than the estimate, and way above the year-over-year number. They have 200 billion announced in 2026 capex, which is quite a bit. Right inline forward guidance on revenue. Ideally, you want to see that. I mean, inline's okay, but ideally, you want to see them forecasting above. And it still gives it a hold. So it says it's a mixed quarter. Revenue beat to solid, but the EPS miss and muted guidance don't justify all of the capex commitment yet, is what our Sidekick is saying. But we'll see what happens on the call.
Yeah, the call is still there. And I think tomorrow is going to be one of the most important days for the market because we are going into the weekend. And is there enough fear where people are going to bail on their positions? That's what I'm really interested to see tomorrow. Or are we going to have institutions actually come in and say, you know what? 12% pullback on Amazon, that's a good deal. I think that's a really important question. And going into the weekend, a lot of the times on Friday, you'll see that decision being made. You know, like what if we get a headline over the weekend about, you know, Trump says something over the weekend? It definitely could lead to a big disaster. As a lot of times, institutions don't even want to take that risk. So I think tomorrow is going to be really telling.
Yeah, 100%. I mean, SPY's trading at decent I guess you could call it support down here around like 672, or it's getting down there. Pretty nasty day. So yeah, we'll see tomorrow.
I
Definitely
think
will be.
Alan pointed out that we have some data tomorrow too. What time is it 8:30 a.m. tomorrow? What do we have coming out tomorrow?
Look. So tomorrow's Friday the 6th. Tomorrow we have consumer sentiment at 10 a.m.
10 a.m. Okay.
Yeah. We got Fed Chair Philip Jefferson speaking, and that's all I'm seeing. So consumer sentiment.
I don't think it's too much of a high impact news event, but it could be.
Yeah.
I don't think it's too much of a high impact though.
Yeah, it's nothing. Yeah. I mean, if consumer sentiment comes in super low, it could have some impact, but it's not the craziest news by any means. But we have the weekly options expiring tomorrow as well, which is always, it's not monthly OPEX, but there's always options expiring now, especially on the indexes and individual names. Lots of Amazon and all these earnings expirations for options will happen. So and IREN, yeah, IREN moving back up just a tad. Let's check out Reddit again here. Let me actually take a look and see what Sidekick. So Sidekick gave a hold on Amazon, which is fair. Let's take a look. I'm curious to what it says on MicroStrategy. Let's take a look.
Yeah.
Here. Is this it? Yeah. So I'll send in that prompt and see what it has to say about MicroStrategy. But yeah, pretty flat. Put on that indicator again. Down 2%, which is really nothing for MicroStrategy. We got a news article here. It looks like MicroStrategy, whatever you call it, stock stalls on Q4 earnings beat as Bitcoin remains in free fall. Yeah, I mean, that's really it. Yeah, of course, Alan. Appreciate you showing up. See you all the time. I appreciate
Thanks, Alan.
it.
Appreciate it, man.
Yeah.
It's gonna be a wild quarter. Very wild quarter, guys. It already has been, really. The question is, can we go lower?
Yeah, for real. Let's see. Gives it a hold on MicroStrategy. I think there's no way they expected negative 18.64.
Someone was mentioning IREN.
Let's see
What's going on with that.
Yeah, it's down.
Popping back up a little bit.
Yeah, it's.
So what is actually green? Anything?
I
don't think so.
Reddit was for a bit, but I think it came down. Is Roblox hanging in there? Roblox.
Yeah, Roblox is hanging in there.
Let's check out Affirm. Affirm is pretty flat. So Roblox out of everything. Oh, I think BE is green, that energy name. So keep an eye on the energy sector, guys. It's been breaking out. See if Fortinet is green or FTNT. FTNT is up 9% as well. Fortinet. CLSK, I've seen this name a little bit, down 10%. MPWR is pretty flat. It's over $1,000 a share, so pretty interesting movement in the after hours. Not a lot of volume. Team is down 6%. So yeah, I mean, you got a couple things up. You got Roblox, FTNT.
Yeah, and remember the futures market is going to open at 6 p.m. Yep. So I wonder if we're going to see a gap on the futures open at 6 p.m. And I wonder if they're going to sell it off tonight or they're going to rally it back overnight. I do think tonight there's going to be a lot of action happening.
Oh, yeah.
There's going to be a lot of drama happening tonight. And the Asia session and London session, it's going to be pretty crazy. So I guess we got to put our seatbelts on.
Yeah. And I'll probably the Amazon earnings call does start in about 20 minutes. So once that comes on, I'll probably go ahead and throw that on for you guys out there in the chat. Let me know if you guys want to hear the Amazon earnings call. I can stream it for you guys. But if you guys have any questions, for Rich or about the markets or anything, let us know down in the chat below.
Yeah, I'm probably gonna head out in a few minutes, guys. So if you have any questions for me, please do put them in the chat. I have a Substack if anyone's interested. It's free. I mainly sell a lot of options on the futures market. I've been on a very, very crazy run since last year. I've sold like over 1,000 calls and puts, and I have 100% win rate doing that. So it's been a wild run, but I recently I got assigned on AMD. So I've been selling puts on AMD. I got assigned. I've been selling calls against AMD. So I had a good run with AMD from November to January. And then with this earnings miss on AMD, I'm probably going to get assigned again, and I'm going to start the wheel strategy. So I love doing the wheel strategy on stocks. If you guys are not familiar with that is, you're selling puts. If you get assigned, you hold the shares, you sell calls against it. And then I do strangles on the S&P. So I think like a stock like MSTR is a great example where the implied move is a lot higher than what actually happens in earnings, and the option prices get crushed, right? So that's one of the things I love to do. So a lot of times fear is, very expensive. It's very, very expensive. Protection is very expensive for companies, and I love to sell options and capitalize on that side.
Yep, absolutely. Yeah, selling options is definitely, I think, the best way for a retail trader to get into the options market. I know most people will tend to buy options, which is, can be fun, but it's also pretty very low win rate strategy, which not a lot of people have.
Yeah. No. And a lot of people talk to me about having a small account and they don't think they can sell options. But if you have a $2,000 to $3,000 account, you could sell spreads on the futures market. You'll get maybe $25 to $50 a week every 7 to 10 days. And the margin requirement will be a few $100s. So there, it's not like going to make you rich or anything like that, but it's a good strategy, build income. And then for me, I think the markets should be able to pay you income every week. I think that's really important. It gives you peace of mind. And a lot of times with these stocks, if you're going to play the stocks game and holding them, you got to really hold it for the long term, if you want to be a part of that.
Yeah. Yeah. People are asking about silver as well. Silver is came right back down to earth here.
Yeah. That's been one of the that looks like one of the marijuana stocks back in the day. Like,
it's kind of insane.
It's a crazy, crazy sell-off.
Yep. Yeah, Rich, if you want to drop your Substack,
it's tradingwars.substack.com. Yeah, I don't know. Could you put it in the chat for me? I don't think I'm
I can do that.
Site. Yeah, tradingwars.substack.com. I have 12,000 followers, guys. So thank you for all your support. I mean, it's free. I'm not charging anything there. I just want you to follow my journey, support me, subscribe to my YouTube. That's all.
Yeah. And we got Rich's X down in the description as well.
Yeah. It's been a crazy run, guys, and I'm happy that one of the plays that I went heavy on was Google, because Google continues to survive through a lot of this.
It has been killing it. It's
look at that candle. That's beautiful.
Crazy candle today. Thought it was going to be a sell-off like all the other big names, and just crazy move right back up today.
Yeah, absolutely beautiful. Google. I have leaps on Google's for 2027, but I may pick up some more shares or sell some leap puts or something like that on Google.
Yeah.
Every week I actually sell puts on Google, actually. So every Tuesday I sell 100 shares of puts 7 days out. I get like $100 or $200, nothing crazy, but I'm always willing to take assignment on Google if it happens.
Yeah. And BW, it's TradingWarz with a Z.
Yes, sir. Yes, sir. Thank you, BW, my friend.
Let's see. Google, AMD, Amazon, SoFi. I haven't looked at SoFi in a bit. I know it's been coming down though. Pretty big name. Yeah.
Oof. Yeah,
SoFi. Oof. Not looking very hot.
I definitely That definitely looks like a Fibonacci extension there. That's probably the 1.618. That looks pretty close to it.
Let's
Coming
see.
off of that
A look
weekly high to
here.
low. Come off of the all-time high actually, and draw it down to that to the red candle to do the projection. So I think go back all the way up for the short leg. Yeah, keep going
Oh,
right
from
there.
here.
Boom. Yep, right there. Yep. And then I think you just gotta reverse it on
Yep.
this one here. I love to do these little measured move targets. They work pretty well for me. But yeah, right there, 1783. And that's going to line up with that previous all-time high. I think that's your best bet if you want to take a shot at it.
That's a good call, honestly. Yeah, 17.
I like that.
17.
The sad thing is, looking at a lot of these charts, there is still room on a lot of these names, which is sad.
There is.
You know, because they've already dropped a lot. I mean, but from a technical point, there's still more from what's going on in the market. There's still more room because the S&P hasn't really dropped as much as a lot of these names. So there's a lot of things that can happen, but I think what we got to do is just be ready, guys. You know, listening in the chat, be ready for opportunities on companies that you believe in. These are pullbacks that people have been asking for. Honestly, people have been asking for pullbacks. So when you get them, are you going to pull the trigger or not? You know, so it might be those opportunities you've been looking for, but make sure it's companies you want to hold. You know, don't go on companies that you can't stomach, because then you're going to panic.
Yeah, absolutely. These opportunities, they don't tend to last very long either when they come around. So make sure you guys,
it's like, you know, a quarter at most generally, right? 2 to 3 months. So how long have we been in this pullback here? What, a month?
If anything,
maybe
like
from Jan, mid to end of Jan, probably.
Depends what you're looking at, I guess. Let's take a look at, you know, like
look at the index.
Yeah, like SPY. I mean, this is really like the first.
It hasn't even really started yet. If you look at the index,
So, and the last one was just a few weeks long. It ended up bottoming there in like November.
That was a real back in November. I remember that one, and I almost got assigned on the puts that I sold in there, and I was able to get out there with 100% win rate on those. But I think if you guys are selling options right now, the VIX is going to be elevated, and you're going to get really good premiums to sell options, right? So make sure you take advantage of that, but at the same time, don't be too aggressive with how far you are in the money. That's the way I look at it. You know, be very careful with your deltas and be more conservative when the VIX is high, you know. So you just never know what could happen.
Yeah, the VIX starting to expand.
What was it in April? Like 60 last year?
In April, just about 60. So only at 22 or so now. Yeah, you guys definitely, keep an eye on the VIX. Whenever it tends to spike up super high like this, premiums are insane. You know, it can be.
That's why it's hard for leaps too. Some people ask me about the leap side, but when the VIX is high, the premium you're going to pay is high too.
That's true. That's true.
So you have to be careful. Sometimes it's better to do the risk reversal, sell the shares, sell puts on companies you want to buy, take that cash and buy shares, but always watch your leverage. Don't leverage, you know, I don't like to go above 2x on my leverage, but some people don't even need to use leverage at all, because it's a double-edged sword. Yeah,
you stay cash secured. But 2x, honestly, with selling options, if you're smart and you know what you're doing, can be okay for sure. But yeah, definitely be careful. If you're like new, definitely keep the leverage to a minimum. Absolutely. Let's see here.
But hey, I'm gonna bounce, mans. But I want to thank you guys for having me, and I really hope that you guys got some value. So thanks for having me on again. And,
of course,
it's been a pleasure.
Yeah, it's always great having you on, Rich. I'm sure we're gonna have you on again in the future. But thanks again for all of your advice. Always some great pointers.
Check out the indicators too, because you know, when I first started off with a small account, I took 5,000 to 84,000 with futures, and I've been using Fibonacci's like that whole time. And the key, I would say, for anybody trying to grow is always get a deal. You know, like if you're trying to short, you short near the top of the range. If you're trying to go long, you go long near the bottom of the range. You don't want to do the opposite because the risk to reward is going to be hard. And one thing I always tell myself is with a 2-to-1 risk to reward, you only need to win 4 out of 10 trades. You know what I mean? So
Yep.
It's not that hard. It's just a matter of you being disciplined. So I hope I leave you guys with some good words there. So thank you very much for having me again.
Of course, man. Have a great rest of your day. We'll see you again soon.
All right. Take care, guys. Right. Bye-bye.
Peace. All right. So back to the lower square. But yeah, you guys, pretty brutal day for Amazon. Let's see. I'll stick around here. If you guys have any questions about the TrendSpider platform, do let me know down in the chat. Also, I can stream the Amazon earnings call if you guys would like me to. But if not, we can just cut it off in about 10 minutes. Usually like to have these go a little over an hour. We've been on live for about an hour and 5 minutes so far. But if you guys are seeing anything out there, let me know down in the chat. If you haven't already, please like this video. Alan, what is going on? Let's see. Alan says, so far this week, I made more money trading alone than the whole year of 2025. Honestly, that was actually a kind of similar thing for me. I was up same in January that I was all of like 2025. Mostly because of SanDisk and a couple of other names. But IREN earnings call, let's take a look. You guys want to hear IREN earnings call or Amazon? What are you guys thinking? The indicator that showed time until candle close. Are you talking about the after hours change one here? Yeah, I'll probably stick on Amazon. I think the majority of you guys would probably want to see Amazon. And it does start here in 9 minutes. The IREN website is actually being pretty slow at the moment. Got IREN, you got Amazon. Can I start a poll? Okay, I'm starting a poll for whichever earnings call y'all want to hear. Yes for Amazon, no for IREN. This will be on YouTube, so go ahead and vote. This is how we can decide. But honestly, guys, I'm not even being able to pull up the IREN investor relations page right now for whatever reason. Oh, here it goes. You know, this is the right one. Close this out. Let's take a look at this poll. Most of you guys so far have voted yes for Amazon, 71% of you guys. So I appreciate it, Alan. The MicroStrategy call. Guys, the IREN, look at this. IREN investor page is literally down at the moment. Honestly, the MicroStrategy call would low-key be goated. I want to see, is he going to do an earnings call? I'm not sure if they do or not. They do. It starts at, do you guys want to see MicroStrategy? Shoot. Oh, it's like a Zoom. I'm not opening Zoom, man. All right, never mind. I don't know if we're gonna do MicroStrategy. But according to the poll, you guys, oh, it's actually pretty 50-50. About 58% of you guys are voting for Amazon. Make sure you guys go ahead and vote. The strategy earnings call could be kind of funny. I do agree. But it's like a Zoom, which is, I don't know. If you guys haven't already, make sure you guys subscribe because we go live 3 to 4 times a week. And so you will not miss out on any future lives if you guys subscribe. Still cannot get anything to load on IREN. Yeah, you guys, more people have voted for Amazon anyway, so I'm just gonna run with Amazon. But we got 5 minutes till it starts. So if you guys have any questions, do let me know. What I can do at least is leave you guys with a multi-symbol view. Never know what's going to be on this multi-symbol view here on the TrendSpider team account. Like, what in the world is going on here? I'm not even sure what. Can't even see this. Here we go. Oh, that's bars. Go to candles. So I'm going to go ahead and stick on. Bro, what is this chart? All right, screw this multi-symbol view. I appreciate that, GRI trader. I do love me some stonks. Is it possible to share views with others or use other view templates? Oh, to share like chart templates. Just the indicators. We can share you guys with share indicators. I think shareable templates and stuff is something that's probably in the works. Wow, you guys, Amazon is down 9% going into this earnings call, which starts in 3 minutes. But I appreciate you guys out there in the chat. Gary, I see you reposting the stream. I appreciate that as well. We're going to have Gary from Daily Stock Pick on next week. So make sure you guys, again, subscribe and tune in to all of our lives next week. We got tons of earnings coming up. Let me see here. If you use the AI market scanner, you can just type find stocks with earnings over the next, let's just say 10 days. And just like that, you guys, once it finds the symbols, it just shows you stuff with earnings over the next 10 days. Incredibly easy. Search in the S&P 100 index. But we have Cisco. That'll be a fun one. Let's search in the S&P 500. And have a much, much bigger list. We got coin coming up. Will be fun. Let's take a look at some daily charts, some weeklies even. Well, that's an anchored VWAP. Anchored VWAP, that coin right there is kind of cool. A Yahoo account? Who in the world has a Yahoo account these days? Just kidding. I think I do have a Yahoo account. When is coming up? When Resorts, DDOG, that one will be fun. CVS, ANET next week. App 11. Oh my God, App 11. Absolutely brutal there. Anyways, yeah. Literally cannot even get the IREN page to load still, but everyone voted Amazon anyway, so sorry for those that want IREN, but I think we're going to just run Amazon. And it should be starting any second now. Let me get the audio. Earnings call starting very, very shortly for Amazon. So let's see if Amazon can pick it up, you guys. Hopefully this call does something because, you know, Amazon is a big, big name. Look at the daily chart right here. I mean, that is, oof, brutal. Absolutely brutal, you guys. So all we have to save us now is the call. Or to save the market, I should say. They're 1 minute late. Keep in mind, you guys, I did use TrendSpider Sidekick AI to analyze Amazon's earnings call or earnings numbers, and it gave it a hold rating. By the way, if you guys didn't know, you can use Sidekick AI to summarize earnings call transcripts. So tomorrow and like a few hours after the earnings call actually happens, Sidekick is going to actually have access to everything that Amazon or that the Amazon, you know, CEO and all the Q&A, everything that was said. Then you can have it go ahead and summarize the call for you. Maybe I can actually show an example off like AMD. AMD just recently announced. Go back to Claude. Summarize the recent AMD earnings call transcript. Give me the key takeaways. Output 1 paragraph and 3 bullet points. And just like this, you guys, if you missed the AMD earnings call, which I did stream live for you guys, you can just go ahead and open Sidekick AI and tell it to summarize the earnings call transcript for you. And as you can see, key takeaways is all right here. So they delivered record Q4 2025 results. You know, it gives you the numbers, of course, and key takeaways down here. Data center AI inflection, the MI450 series and Helios rack scale systems launching H2 2026 with OpenAI partnership on track. Instinct GPU revenue hit records in Q4. AMD targets tens of billions in AI revenue for 2027. That's very nice. Margin expansion and guidance. Q1 2026 gross margin guided up to 55%. So you can see you get the forward guidance here. Whatever was said on the call. Full year revenue expected around 35% growth. And this is interesting. though gaming semi-custom revenue will decline significant double digits in year 7 of console cycle. But yeah, guys, just basic prompt. I just said summarize the AMD earnings call transcript, and it will just, you can do that for any stock that, of course, recently had earnings. And you can take a look at Sidekick on the TrendSpider site. Also, if you guys are still around waiting for this Amazon earnings call to start, which I will play in just a second here, make sure you guys sign up for the free TrendSpider newsletter. We give you guys free trading ideas sent right to your inbox every single Sunday, completely for free. You just have to use the link I just posted in the chat or in the description on YouTube to sign up completely for free. But let's see if Amazon is live.
Energy prices,
Here we go. Can you
changes
guys
in
hear
global
this Amazon
economic
call?
and geopolitical conditions, tariff and trade policies, resource and supply volatility, including for memory chips, and customer demand and spending, including the impact of recessionary fears, inflation, interest rates, regional labor market constraints, world
Perfect.
events, the rate of growth of the internet, online commerce, cloud services, and new and emerging technologies, and the various factors detailed in our filings with the SEC. Our guidance assumes, among other things, that we don't conclude any additional business acquisitions, restructurings, or legal settlements. It's not possible to accurately predict demand for our goods and services, and therefore our actual results could differ materially from our guidance. And now I'll turn the call over to Andy.
Thanks, Dave. We're reporting $213.4 billion in revenue, up 12% year over year, excluding the impact from foreign exchange rates. Operating income was $25 billion, and trailing 12-month free cash flow was $11.2 billion. We're seeing strong growth, and with the incremental opportunities available to us in areas like AI, chips, low Earth orbit satellites, quick commerce, and serving more consumers' everyday essentials needs, we have a chance to build an even more meaningful business at Amazon in the coming years with strong return on invested capital, and we're investing to do so. We're already seeing strong demand in these areas, even in these early innings. I'll start with AWS. AWS growth continued to accelerate to 24%, the fastest we've seen in 13 quarters, up $2.6 billion quarter over quarter and nearly $7 billion year over year. AWS is now a $142 billion annualized run rate business, and our chips business, inclusive of Graviton and Trainium, is now over $10 billion in annual revenue run rate, growing triple-digit percentages year over year. As a reminder, it's very different having 24% year-over-year growth on a $142 billion annualized run rate than to have a higher percentage growth on a meaningfully smaller base, which is the case with our competitors. We continue to add more incremental revenue and capacity than others and extend our leadership position. We're continuing to see strong growth in core non-AI workloads as enterprises return to focusing on moving infrastructure from on-premises to the cloud, along with AWS having the broadest functionality, strongest security and operational performance, and most vibrant partner ecosystem. AWS continues to earn most of the big enterprise and government transitions to cloud. Since our last call, we announced new agreements with OpenAI, Visa, MBA, BlackRock, Perplexity, Lyft, United Airlines, DoorDash, Salesforce, U.S. Air Force, Adobe, Thomson Reuters, AT&T, S&P Global, National Bank of Canada, the London Stock Exchange, Choice Hotels, Accenture, Indeed, HSBC, CrowdStrike, and many more. More of the top 500 U.S. startups use AWS as their primary cloud provider than the next two providers combined. We're adding significant EC2 core computing capacity each day, and the majority of that new compute is using our custom CPU silicon, Graviton. Graviton is up to 40% more price performant than leading x86 processors and is used expansively by over 90% of AWS's top 1,000 customers. Graviton itself is a multi-billion-dollar annualized run rate business growing more than 50% year over year. We consistently see customers wanting to run their AI workloads where the rest of their applications and data are. We're also seeing that as customers run large AI workloads on AWS, they're adding to their core AWS footprint as well. But the biggest reason that AWS continues to gain AI share is our uniquely broad top-to-bottom AI stack functionality. In AI, we're doing what we've always done in AWS, solving customer challenges. Let me give you some examples. The first challenge is having a strong foundation model to generate inferences or predictions. Customers are realizing as they get further into AI that they need choice, as different models are better on different dimensions. In fact, most sophisticated AI applications leverage multiple models. Whether customers want frontier models like Anthropic's Claude, or open models like Mistral or Llama, frontier intelligence with lower cost and latency like Amazon Nova, or video and audio models like 12 Labs or Nova Sonic, Amazon Bedrock makes it easy to use these models to run inference securely, scalably, and performantly. Bedrock is now a multi-billion-dollar annualized run rate business, and customer spend grew 60% quarter over quarter. The second challenge is how to hone the model for your application. Customers sometimes think if they have a good model, they will have a good AI application. It's not really true. It takes a lot of work to post-train and fine-tune a model for your application. Our SageMaker AI service, along with fine-tuning tools in Bedrock, make this much easier for customers. A third challenge is how to have a custom version of a foundation model that best leverages a company's secret sauce, their own data. To date, companies have tried to shape models with their own data late in the process, usually with fine-tuning or post-training. There's debate in the industry about this, but we believe that enterprises will want models trained on their own data at an early stage, at pre-training if possible, so their models have the best possible foundation for what matters most to each enterprise on which to learn and evolve. It's a little like teaching a child a foreign language early in their life. That becomes part of their learning foundation moving forward, and it makes it easier to pick up other languages later in their life. To solve for this need, we just launched Nova Forge, which gives customers early checkpoints on our Amazon Nova models, allows them to securely mix their own proprietary data with the model's data in the pre-training stage, and enables their own uniquely customized versions of Nova, what we call novellas, trained with their data early in the process. This will be very useful for companies as they build their own agents on top of a model. There is nothing else out there like this today and a potential game changer for companies. Another challenge is cost. I've said this many times, but if we want AI to be used as expansively as companies want, we have to make the cost of inference lower. A significant impediment today is the cost of AI chips. Customers are starving for better price performance, and typically and understandably, the dominant early leaders aren't in a hurry to make that happen. They have other priorities. It's why we've built our own custom silicon and Trainium, and it's really taken off. We've landed over 1.4 million Trainium 2 chips, our fastest ramping chip launch ever. Trainium 2 is 30 to 40% more price performant than comparable GPUs, and is a multi-billion-dollar annualized revenue run rate business with 100,000 plus companies using it, as Trainium is the majority underpinning of Bedrock usage today. We recently launched Trainium 3, which is up to 40% more price performant than Trainium 2. We're seeing very strong demand for Trainium 3 and expect nearly all of our Trainium 3 supply of chips to be committed by mid-2026. And though we're still building Trainium 4, we're seeing very strong interest already. Looking ahead, the primary way companies will get value from AI is with agents, some their own, some from others, and there are several customer challenges that we're well positioned to solve. It's harder to build agents than it should be. For that, we've built Strands, a service enabling agents to be created from any model. Once agents are built, enterprises are apprehensive about deploying to production because these agents need to securely and scalably connect to compute, data, tools, memory, identity, policy governance, performance monitoring, and other elements. This is a new and hard problem where a solution has not existed until we launched Bedrock Agent Core. Customers are quite excited about Agent Core, and it's unlocking deployments. Customers also want to leverage others' useful agents, and we've built several, including Curo for coding, Amazon Quick for knowledge workers to leverage their own data and analytics, AWS Transform for software migration, and Amazon Connect for call center operations. We continue adding new capabilities, and usage continues to grow quickly. For example, the number of developers using Curo grew more than 150% quarter over quarter. In addition to agents that customers direct, customers are also becoming excited about agents that require less human interaction. They can be fully autonomous, run persistently for hours or days, scale out quickly, and remember context. At this past AWS reInvent, we launched Frontier agents to do that. Curo autonomous agents for coding tasks, AWS DevOps agents for detecting and resolving operational issues, and AWS security agents for proactively securing applications throughout the development lifecycle, and they're already making a big difference for customers. We expect to invest about $200 billion in capital expenditures across Amazon, but predominantly in AWS because we have very high demand. Customers really want AWS for core and AI workloads, and we're monetizing capacity as fast as we can install it. We have deep experience understanding demand signals in the AWS business and then turning that capacity into strong return on invested capital. We're confident this will be the case here as well. I'll now turn to stores. We continue to expand selection, including more than 400 new beauty brands in the U.S. in 2025, like Bobbi Brown Cosmetics, Charlotte Tilbury, and Laura Mercier, and new fashion brands like Away Luggage, Converse, Diesel, Michael Kors, Nike, and The North Face. Our ultra-low priced offering, Amazon Haul, grew selection to over 1 million items under $10 and expanded to serve customers in more than 25 countries and regions. We continue to see strong customer response to everyday essentials and grocery. In 2025, everyday essentials grew nearly twice as fast as all other categories in the U.S., representing 1 out of every 3 units sold in our store. And we've become a go-to grocery destination for over 150 million Americans, mostly through online shopping and Whole Foods. With over $150 billion in gross sales, Amazon is clearly a large grocer at this point. Customers in thousands of U.S. cities and towns can now get perishables delivered same day alongside millions of other items, and customers who use that service shop more than twice as often as customers who don't. We plan to expand in many more communities in 2026, and we also plan to open more than 100 new Whole Foods Market stores over the next few years as we work to make grocery shopping easier, faster, and more affordable for customers. We remain committed to staying sharp on price and continue to meet or beat other retailers' prices. A recent study from Profitero showed that Amazon is America's lowest price retailer for the 9th straight year, 14% lower on average than other major online retailers. We again achieved our fastest ever delivery speeds for Prime members around the world in 2025. In the US, we delivered nearly 70% more items same day than the year before. We also continue increasing speed for rural customers, with nearly 2 times more average monthly customers in rural areas receiving same-day delivery year over year. Same day is our fastest growing delivery offering, and nearly 100 million customers used it last year in the US. And the team is continuing to innovate. We've launched Amazon Now in India, Mexico, and the UAE, ultra-fast delivery on thousands of items in about 30 minutes or less. And we're testing it in several communities in the US and UK. It's early, but customers are loving it. For example, in India, customer response exceeded our most optimistic expectations, and we're seeing Prime members triple their shopping frequency once they start using it. Expanding our same-day delivery coverage also leads to meaningfully later cutoff times for orders, which is a big deal for customers. For example, on Christmas Eve, customers in about 4,000 U.S. cities could order items up until midday and get them that same day. Another example is our recently launched feature, Add to Delivery, which enables Prime members in the U.S. to add items to their upcoming Amazon deliveries with just 1 tap without going through checkout again or paying additional shipping fees. Just 6 months after launch, Add to Delivery already makes up about 10% of all Prime volume fulfilled through the Amazon network each week. While this seems simple on the surface, this feature is supported by a lot of invention where we need to figure out in real time and with incredibly low latency what items among Amazon's hundreds of millions of products are available to add to a customer's upcoming deliveries, surface them, find a way to include in their packages, and deliver within the same customer promise. The stores team is also continuing to innovate and deliver for customers with AI. Our agentic AI shopping assistant, Rufus, is rapidly expanded. Rufus can research products, track prices, and auto-buy, purchasing a product in our store when it reaches your set price. It can also now shop tens of millions of items in other online stores and make purchases for customers using our agentic Buy For Me feature. Last year, more than 300 million customers used Rufus. In addition, customers used Lens, our AI-powered visual search tool, to find products with a phone's camera, a screenshot, or a barcode, and they did it 45% more year over year. Moving on to Amazon ads, we're pleased with the continued strong growth across our full funnel offerings, generating $21.3 billion of revenue in the quarter and growing 22% year over year. Sponsored products advertising in our store continues to be our largest ads offering, and the combination of trillions of shopping, browsing, and streaming signals with advanced AI and machine learning let us deliver highly relevant and useful ads for customers. We saw continued growth in Prime Video ads, which is now available in 16 countries and is contributing meaningfully to our revenue growth. Prime Video has an average ad-supported audience of 315 million viewers globally, up from 200 million in early 2024. Our ads team is also innovating with AI. We recently announced our ads agent, which lets brands use AI to create and optimize campaigns at scale, implement effective campaign targeting, and quickly create actionable insights. And our creative agent lets advertisers research, brainstorm, and generate full funnel ad campaigns from concept to completion using conversational guidance and Amazon's retail data, transforming what was a weeks-long process into just hours. We're also continuing to invent and see momentum in several other areas, and I'll mention just a few. Starting with live sports on Prime. The fourth season of Thursday Night Football broke more records. It was our most watched season ever, averaging more than 15 million viewers, a 16% year-over-year increase, and a third consecutive year of double-digit growth. And the Packers versus Bears wildcard game was the most streamed NFL game in history with 31.6 million viewers, clearing the prior mark by more than 4 million. We just made Alexa Plus available to all customers in the US, free for Prime members and $19.99 a month for non-Prime members. Alexa Plus continues to get even better and more capable, and we've added new ways to interact with Alexa, including a new chat experience at alexa.com, a redesigned mobile app, and new integrations with third-party devices like Samsung TVs and BMW cars. We've also added new features like the ability to answer a Ring doorbell on a customer's behalf and more ways to shop or manage a home. And finally, the team is making rapid progress on Amazon Leo, which will bring connectivity to consumers, enterprises, and governments in places where they don't have broadband connectivity. Our enterprise-grade customer terminal, Leo Ultra, is the fastest satellite internet antenna ever built, delivering simultaneous download speeds of up to 1 gigabit per second and upload speeds of up to 400 megabits per second. Leo will offer enterprise-grade performance and advanced encryption with secure private networking that bypasses public internet, connecting directly to AWS. We've launched 180 satellites, have more than 20 launches planned in 2026, more than 30 in 2027, and expect to launch commercially in 2026. We have dozens of commercial agreements already signed, including with AT&T, DirecTV Latin America, JetBlue, and Australia's national broadband network, and have many more on the way. It's been an action-packed year of innovation and progress, and we've hit the ground running in 2026. With that, I'll turn it over to Brian for a financial update.
Thanks, Andy. Starting with our top-line financial results. Worldwide revenue was $213.4 billion, a 12% increase year over year, excluding the 150 basis points favorable impact of foreign exchange. In Q4, we reported worldwide operating income of $25 billion. This operating income includes three special charges, which reduced operating income by $2.4 billion. The first charge of $1.1 billion is for the resolution of tax disputes associated with our stores business in Italy and the settlement of a lawsuit. This charge primarily impacts our international segment and is largely recorded in the fulfillment and other operating expense line items. Second charge of $730 million is for the estimated severance costs. This charge impacts all three of our segments and is recorded primarily in the fulfillment, sales and marketing, and technology and infrastructure expense line items. The third charge of $610 million is for asset impairments, primarily related to physical stores. This charge primarily impacts the North America segment and is recorded in the other operating expense line. Moving on to our segment results. In the North America segment, fourth quarter revenue was $127.1 billion, an increase of 10% year over year. International segment revenue was $50.7 billion, an increase of 11% year over year, excluding the impact of foreign exchange. Worldwide paid units grew 12% year over year, which was our highest quarterly growth rate in 2025. The fourth quarter marked a strong finish to the year as we delivered for customers during the peak holiday season. Our sharp pricing, vast selection, and record fast delivery speeds resonated with customers. They appreciated the convenience of receiving their items quickly, from gifts for family and friends to everyday essentials and perishable groceries. Our millions of global third-party sellers continue to be an important contributor to our broad selection. In Q4, worldwide third-party seller unit index was 61%. We continue to invest in tools and services, including a comprehensive suite of AI tools that help our selling partners manage and grow their businesses. Shifting to profitability, North America's segment operating income was $11.5 billion with an operating margin of 9%, up from an 8% margin in Q4 of 2024. International segment operating income was $1 billion with an operating margin of 2.1%. Excluding the impact of special charges mentioned earlier, the international segment operating margins also expanded year over year. We're pleased with the fulfillment network performance throughout the peak season. We made strong progress improving the cost structure of our network over the past few years. In the U.S., our regionalized network is operating at scale, and we continue to make refinements. This regionalization has improved local inventory placement, leading to faster delivery at lower costs. Last year, U.S. Prime members received over 8 billion items the same or next day, up more than 30% year over year, with groceries and everyday essentials making up half of the total items. For the third year in a row, globally, in 2025, we achieved both our fastest ever delivery speeds for Prime members while also reducing our cost to serve. By leveraging our existing U.S. network, we can now deliver perishable groceries to customers in more than 2,300 cities and towns, all with same-day delivery. We saw significant adoption of this service throughout the year. When customers engage with our perishable offering, they demonstrate notably higher monthly spend compared to those who do not shop the category. We also see that customers shopping perishable groceries add 3 times more items to their same-day delivery orders. Looking ahead, we see further opportunity to enhance productivity in our global fulfillment network while delivering at faster speeds for customers. We will continue optimizing inventory placement to drive down distance traveled, reduce touches per package, and improve package consolidation, as well as launch robotics and automation to increase efficiency and elevate the customer experience. Shifting to advertising. Advertising revenue grew 22% in the fourth quarter, and we added over $12 billion of incremental revenue in 2025 alone, as our full funnel advertising approach of connecting brands with customers is resonating. Simplifying the advertiser experience to enable brands to better reach customers wherever they are. Moving next to our AWS segment, revenue was $35.6 billion, and growth accelerated to 24% year over year. We added $2.6 billion in quarter-over-quarter revenue, and AWS now has an annualized revenue run rate of $142 billion. This acceleration was driven by both core and AI services as customers continue to modernize their infrastructure and migrate workloads to the cloud. Our AI offerings continue to resonate with customers, including our agentic capabilities. This growth was helped in part by the more than 1 gigawatt of capacity we added in Q4. In 2025, AWS added more data center capacity than any other company in the world. AWS operating income was $12.5 billion. We're seeing strong top-line growth while remaining focused on driving efficiencies across the business. This includes investing in software and process improvements to optimize server capacity, developing a more efficient network using our lower-cost custom networking gear, and advancing custom silicon. At the same time, we continue to rapidly develop products and services on behalf of customers. As we've long said, we expect AWS operating margins to fluctuate over time, driven in part by the level of investments we're making at any point in time. Turning to cash flows, our full-year operating cash flow increased to $139.5 billion in 2025, up 20% year over year, due primarily to improved operating income and changes in working capital. Now turning to our Q1 financial guidance. Q1 net sales are expected to be between $173.5 billion and $178.5 billion. This guidance anticipates a favorable impact of approximately 180 basis points from foreign exchange rates. As a reminder, global currencies can fluctuate during the quarter. Q1 operating income is expected to be between $16.5 billion and $21.5 billion. A few things to mention on the operating income guidance. Within the North America segment, we do expect a year-over-year cost increase of approximately $1 billion related to Amazon Leo. We have more than 20 launches planned in 2026 and more than 30 in 2027, which means we're spending more on launching satellites each year. Select enterprise customers are testing Amazon Leo services now, and we expect a wider commercial rollout later this year. As a reminder, today we do expense most of these Leo costs as incurred. We expect that later in the year, many of these costs, such as satellite manufacturing and launch services, will be capitalized. Within the international segment, we're continuing to invest more in our stores business to enhance the customer experience and to encourage retail demand to move online more quickly. This includes bringing faster delivery options, including Amazon Now, or service which delivers to customers in 30 minutes or less. We're also working hard to stay sharp on pricing and seller fees. And there are countries where we've had to be more aggressive to meet or beat competitors' prices. We like these investments because they will delight customers, grow our business, and we believe they will generate long-term positive return on invested capital. As we enter 2026, I'm energized by our team's strong execution. I want to thank everyone across the company for their hard work on behalf of our customers. We remain focused on driving an even better customer experience, which is the only reliable way to create lasting value for our shareholders. With that, let's move on to your questions.
At this time, we will now open the call up for questions. We ask each caller to please limit yourself to one question. If you would like to ask a question, please press *1 on your telephone keypad. We ask that when you pose your question, you pick up your handset to provide optimum sound quality. Once again, to initiate a question, please press then 1 on your touch-tone telephone at this time. Please hold while we poll for questions. Thank you. Our first question comes from the line of Mark Mahaney with Evercore ISI. Please proceed with your question.
Okay, thanks. I think, Brian, let me throw this to you or maybe to Andy. On the strong long-term return on invested capital, I think that's the debate in the market today. So could you give us a little bit more insight into how you think investors will be able to see that? Either talk about the duration of the CapEx cycle that you're going through now, or what we should see in terms of profitability levels, and maybe also talk about like other de minimis or minimum free cash flow generation levels that you don't want to go below as you go through this CapEx cycle. Just help us, get to that, get to your level of confidence in having a strong long-term return on that invested capital. Thank you.
Yeah, sure, Mark. Thank you. I'll start from a financial side. So on the investments we're making, as Andy said earlier, we are putting into service with customers all capacity that we're getting, and it's immediately useful. And we're also seeing a long arc of additional revenue that we see from other customers and backlog and commitments that people are anxious to make with us, especially for AI services. So you can see that's working its way into our P&L, both through CapEx and also through our operating margin in AWS. AWS is 35% operating margin through Q4, up 40 basis points year over year. As we talked about before, that is going to fluctuate over time. It certainly has a headwind from the investments in AI and the depreciation on that CapEx. But we also work very hard to offset that with efficiencies and cost reductions. So we will see how that develops over time. So, we see strong return on invested capital. We see strong demand for these services, and we continue to like the investments in this area.
I would add to that, if you look at the capital we're spending and intend to spend this year, it's predominantly in AWS. And some of it is for our core workloads, which are our non-AI workloads, because they're growing at a faster rate than we anticipated.
but most of it is in AI. And we just have a lot of growth and a lot of demand. And when you're growing 24% year over year with an annualized revenue run rate of $142 billion, you're growing a lot. And what we're continuing to see is as fast as we install this capacity, this AI capacity, we are monetizing it. So it's just a very unusual opportunity. As I've shared a lot of times, I passionately believe that every customer experience that we know of today is going to be reinvented. With AI, there are going to be a whole bunch of customer experiences that none of us ever imagined that are going to become the norms of how we all operate every day and what we use. And I think the other thing is that if you really want to use AI in an expansive way, you need your data in the cloud and you need your applications in the cloud. Those are all big tailwinds pushing people towards the cloud. So we're going to invest aggressively here, and we're going to invest to be the leader in this space as we have been for the last number of years. We have, I think, a fair bit of experience over the years in AWS of forecasting demand signals and doing it in such a way that we don't have a lot of wasted capacity and that we also have enough capacity to serve the demand that's there. And I think we've also proven with AWS over the years in how we build data centers and how we run them and how we invent in there. If you think about our chips and our hardware, our networking gear, and how we've invented in power, that this isn't some sort of quixotic top line grab. We have confidence that these investments will yield strong returns on invested capital. We've done that with our core AWS business, and I think that will very much be true here as well. And I think some of the things that you will see over time in the AI space is you're going to keep seeing all of the inference services, which is going to be the majority of the long-term AI workloads is going to be inference. You're going to see the inference keep getting optimized. You're going to see higher utilization on those services. You'll see prices normalize over a period of time. And then I think the companies that have not just the excellence in infrastructure, but also the components that give customers better price performance and give those companies themselves better economics are going to have advantaged financials. And I think if you look, we're already off to a really good start having Trainium underneath the majority of our Bedrock service. And that's not just giving customers better prices, but it also gives us better economics. And so we see that following the same sorts of patterns we saw in the early days of our core AWS investment. I'm very confident we're going to have strong return on invested capital here.
And the next question comes from the line of Doug Anmuth with JP Morgan. Please proceed with your question.
Thanks so much for taking the questions. Can you just talk about how Project Rainier is running with Anthropic after its first full quarter? And I think in the release, it talks about 500,000 chips, but a few months ago, you talked about getting to 1 million as well. So if you could clarify that. And then maybe just to follow up on Mark's question, are there any financial guardrails or governors in place that we should think about around the spend, just in terms of operating income growth or positive free cash flow? Thanks.
Yeah, I'll start with the Trainium piece. We are very excited about the growth that we see in Trainium and the future that we have there. I think if you look at what's happened in the early innings of AI over the first few years, you see a lot of usage, but customers are really thirsty for better price performance. And Trainium has 30 to 40% better price performance than comparable GPUs, so it's very compelling to customers. You mentioned Project Rainier. Anthropic is building they're training their next Claude model on top of Trainium 2. And that's what Project Rainier is. We talked about 500,000 chips there. You will see that continuing to increase. They're also using a fair bit of Trainium 2 for other workloads and their own APIs beyond just Project Rainier. But Trainium is a multi-billion-dollar annualized run rate business at this point, and it's fully subscribed. And what you're also seeing is Trainium 3 which is the next version of Trainium, which we just started shipping, that's 40% more price performant than Trainium 2. And we have there is very substantial amount of interest there. We expect that nearly all of that supply will be committed by somewhere around the middle of this year. And we're just in the process of building Trainium 4. There's very substantial interest in Trainium 4, which is coming in 2027. And we're already having conversations about Trainium 5. So there is a lot of interest in Trainium at this point. And I think when I think people know about our chips capability, our chips business, but I'm not sure folks realize how strong a chips company we've become over the last 10 years. If you look at what we've done with Trainium, if you look at what we've done with Graviton, which is our CPU chip, which is about 40% better price performance than comparable x86 processors, 90% of the top 1,000 AWS customers are using Graviton very expansively. If you combine Trainium and Graviton, it's well over a $10 billion annualized run rate business. And it's still very early there. So I'm very optimistic about what we're seeing. We have, the Project Rainier has gone very well. I think Anthropic is quite pleased with it. We've learned a lot in the process as well, but it's early days with what's possible here. This is a big business that's getting bigger and has a lot of potential. And I just, I'd briefly comment on your second question that, we are, as I mentioned, this is what, I think this is an extraordinarily unusual opportunity to forever change the size of AWS and Amazon as a whole. I think it also is an extraordinary opportunity for companies to change all their customer experiences and for startups to be able to build brand new experiences and businesses that would have taken much longer to try to accomplish before that they can do right now. And so we see this as an unusual opportunity, and we are going to invest aggressively here to be the leaders because like we've been the last number of years and like I think we will be moving forward.
Thank you. The next question comes from the line of Ross Sandler with Barclays. Please proceed with your question.
Great. Andy, you mentioned a few calls back how the AI market was currently a bit top heavy with a lot of the spend kind of clustering around a few of the AI native labs. So how is that changing as you look out into 26? And specifically, how do you think you might extend your relationship with a company like OpenAI to maybe help Amazon's AI efforts, both on the retail side and the AWS side? Thanks a lot.
Yeah, the way I would describe what we see right now in the AI space is it's really kind of a barbelled market demand where, on one end, you have the AI labs who are spending gobs and gobs of compute right now, along with what I would consider a couple runaway applications. And then at the other side of the barbell, you've got a lot of enterprises who are getting value out of AI in doing productivity and cost avoidance types of workloads. These are things like customer service or business process automation or some of the fraud pieces. And then in that middle of the barbell are all the enterprise production workloads. And I would say that the enterprises are in various stages at this point of evaluating how to move those, working on moving those, and then putting them into production. But I think that middle part of the barbell very well may end up being the largest and the most durable. And I would put in the middle of that barbell too, by the way, I would put just the altogether brand new businesses and applications that companies build that right from the get-go run in production on top of AI. And so I think that, to me, when I look at this, what's happening, it's kind of unbelievable if you look at the demand of what you're seeing already with AI, but the lion's share of that demand is still yet to come in the middle of that barbell. And that will come over time. It will come as you have more and more companies with AI talent, as more and more people get educated with that AI background, as inference continues to get less expensive, and that's a big piece of what we're trying to do with Trainium and our hardware strategy. And as companies start to have success in moving those workloads to further and further success in moving those workloads to run on top of AI. So I think it's just a huge opportunity. It's still in the relative early stages, even though it's growing at a very unprecedented clip, as we've talked about. And then I think, how do we see our relationships extending with other companies like OpenAI? I would tell you that this movement and what's happening in AI is it's very broad. It's going to be a lot of companies. It is a lot of companies already. There's a number of AI labs, but almost every company you talk to, almost every conversation we have on the AWS side starts with AI. And so we have very significant relationships with a lot of different companies. I think we announced an agreement with OpenAI in November. We're excited about that agreement. It's a big one. And we have a lot of respect for the company, and we hope to continue to extend our partnership over time. But this AI movement is not going to be a couple companies. It's going to be thousands of companies over time.
Thank you. The next question comes from the line of Michael Morton with MoffettNathanson. Please proceed with your question.
Hi, good evening. Thank you for the question. This one's on the retail business. Andy, you've talked about how you're passionate this is going to change experiences across the board, and you've shared some encouraging data points on Rufus. And we're seeing all the other internet platforms roll out agentic protocols. I would love to see how you think this plays out for the retail business and the on-site ads portion of the retail business. Is what seems like it could be a compression in the funnel as consumers get better answers over time. Anything there would be great. Thank you.
I'm very optimistic about the customer experience that will ultimately be what customers use for agentic shopping. And I think it's good for customers. I think it's going to make it easier for them. And it's a big piece of why we've invested as significantly as we have in our own shopping assistant in Rufus. And if you haven't checked out Rufus recently, I really encourage you to do so. It's gotten much, much better, and it keeps getting better every month. And we have 300 million customers who used Rufus in 2025. Customers who used Rufus are about 60% more likely to complete a purchase. And so you're seeing a lot of usage of it and a lot of growth, and I think it's very useful. And I think at the same time, we will have relationships with third-party horizontal agents that can enable shopping as well. We have to collectively figure out a better customer experience. It's still, these horizontal agents don't have any of your shopping history. They get a lot of the product details wrong. They get a lot of the pricing wrong. And so, we have to try to find a customer experience together that's better, and a value exchange that makes sense for both parties. But I'm very hopeful that we'll get there over time. We continue to have a number of conversations. And then I think you're going to have to look at, as time goes on, which types of, which shopping agents are consumers going to use. And it kind of reminds me in some ways of the early days of kind of all the search engines that were referring traffic to retailers. And, it's still a relatively small portion of the overall traffic and sales. But, of that fraction, you have to ask how many consumers are going to prefer using a horizontal agent where it's kind of a middle person between the retailer and the consumer, versus wanting to use a great agent from that retailer that has all its shopping history and that has all the data right there and makes it easy if you're just, spearfishing for something to shop for it right there. Or if you want to do discovery, you can do it there, and it's got the best data on shopping. I think a lot of customers are ultimately going to choose to use a great shopping agent from that retailer. Because if you think about what consumers really want in retail, in a retailer, they want really broad selection. They want low prices, they want really fast delivery, and then they want a retailer that they can trust and that takes care of them. And I think horizontal agents are pretty good at aggregating selection, but retailers are much better at doing all four of those items. And so I'm very optimistic that people will use our shopping agent. It's off to a great start. I also expect that we'll work with other third-party agents over time as we work on the issues I mentioned earlier.
Thank you. The next question comes from the line of Brian Nowak with Morgan Stanley. Please proceed with your question.
Thanks for taking my question. Andy, I want to ask you one about the global retail business this year. I know there's a lot of areas of investment in it that you're talking about to sort of make improve the service, make it more durable over the long term, et cetera. But I'm assuming there are also sources of efficiency you expect to see this year. So can you sort of help us understand both sides of the ledger on retail this year? Where are some of the areas where you see the potential for sources of efficiency and cost to serve savings? And then where should we be thinking about the areas of investment to sort of drive more durable growth, robotics, et cetera? How does that sort of break down?
Yeah. So I would say on the side of continuing to invest to keep growing the retail business, the kind of core drivers of demand continue to be the same. We're going to work really hard to expand selection, and you've seen what we've done over the last several years. The expansion of selection has been broad, and you'll see it on both ends of the spectrum. We have a lot more of those luxury brands that have built presences in Amazon, had success, and found that we could manage their brand presentation the right way, and they've been very happy. I mean, you only have to look at L'Oreal as an example too, of just how fast that business is growing and how happy our partners have been. And at the same time, we are working really hard to continue to expand the amount of everyday essentials that we offer our customers. And the growth in everyday essentials in our business is really remarkable, as I mentioned in my opening comments. And 1 out of 3 units now that we move are everyday essentials. And what we find there is that the more that customers can rely on us for everyday essentials and the lower ASP items, they just choose to do more of their downstream shopping with us in every way. We're just more front of mind. And so, I think a big piece of why we have captured more and more of those everyday essentials, and you see it also in our grocery business with perishables too, it's just our speed of delivery improvements over the last 3 years has been really marked. I mean, it's customers. It's the one thing I get stopped on the street most often about, which is I just can't believe how quickly from when I order something I get it to my door and how reliable you are. I think along that speed of delivery piece, it's also quite interesting what's happening with quick commerce, and we have this offering called Amazon Now that we've largely started outside the U.S. and India and the UAE and Mexico that gets thousands of items to customers within 30 minutes. And it really is, it's quite interesting how quickly that is growing. And I think that it's just another one of those things like everyday essentials that when you're able to order more and more from Amazon, you just think of Amazon first if it's a great experience that we're offering for whatever you're looking for. But if you look in India, which is the place we've rolled out quick commerce the fastest, customers who try quick commerce are shopping with triple the frequency than they did before they tried us on quick commerce. So those are all areas I think are pretty excited that we're expanding. You'll see us continue to expand what we're doing on the perishable side too, which we're quite excited about. We are able to deliver perishables same day in thousands of cities around the world now. In the cities in which we have those perishables available, 9 of the 10 top items that are ordered in that geography are perishables. So we're just having a lot of success with that too. And people who buy perishables from us, after they buy perishables, they're shopping with us twice as frequently. So a lot of good things to like there. And then, on the efficiencies, we always have a very long list of these that we're working on, Brian. And it's true today as well. Like if you look, even, I talked a lot about regionalization in our fulfillment network, and particularly in the U.S., over the last couple of years. And I said we weren't done honing that, and that's true. It's just we're
we don't talk about it every time, but if you look at what we've done there, we've extended the number of regions. It was 8, it's now 10. We've extended regionalization to what we do with our inbound delivery to be much more efficient, being able to get more items closer to customers more quickly. We have we're doing a lot of work, and we've made a huge amount of progress in being able to get more units into each box. And as we're able to get more units into each box, it obviously saves shipments, and we drive better operating income when we do that. And we've made very significant progress there, but have a lot more planned. It's part of, by the way, that improvement is part of what helps us do things like I was talking about earlier in adding to a delivery in near real time. And then, robotics, as you mentioned, is another big one for us. We have over 1 million robots today in our fulfillment network. They take care of all sorts of functions, but still a fraction of what I think we're going to be able to enable over time, which will allow we'll always have a lot of people that we employ in our fulfillment network, but they'll leave to the robotics things that, that are more repetitive. So it's better productivity for the business, more safe for our teammates, and there's real cost efficiencies in that as well. So a lot on both sides of the ledger, as always.
Thank you. And our final question comes from the line of Eric Sheridan with Goldman Sachs. Please proceed with your question.
Thanks so much for taking the question. Maybe a few parts just on AWS. Can you speak to the current state of your revenue backlog as of Q4, and also discuss a little bit about what you see both for internal use cases and external client needs with respect to any imbalance between supply and demand around AI efforts, and how you think about closing the gap on those as more capacity comes online through 2026? Thank you.
Yeah, that's a lot of parts. I'll start with the first one, which is on backlog. Our backlog is $244 billion. That's up 40% year over year. I think it's up 22% quarter over quarter. We have a lot of deals that are in the pipeline. There's just, as I mentioned earlier, there is a lot of demand for AWS right now in the AI space and also in the core AWS space. Your second question was internal and external use cases. I would, and then the impact around supply and demand. The vast majority of our the capital that we spend and the capacity that we have is consumed by external customers. Amazon has always been a very large AWS customer, a very helpful AWS customer, because they're very demanding and they use the services very expansively and stretch the limits as we launch things. So they've always been a very important, big customer, but always a very small fraction of the total, and that's true today in AI as well as the overall AWS business. Internally, we have all sorts of ways that we are using AI. We have over 1,000 AI applications that we've either deployed or in the process of building, and they range from our shopping assistant in Rufus that we were just talking about, to Alexa Plus, which is a really large-scale generative AI application, to applications in our fulfillment network that allow us to have more accurate forecasting predictions, to how we do customer service and our customer service chatbot, to how we are making it much easier for brands to create advertisements and to optimize all of their campaigns across the full funnel of advertising options we have. To in live sports, if you watch Thursday Night Football, you can see defensive alerts which predict which player is going to blitz, or pocket health. I mean, in every one of our businesses, you see a very broad use of AI to improve the customer experience, and in many cases, just to completely reinvent what was possible before. I mean, it's pretty neat to use something like Lens,
where you may see something you want to buy. You can just take a picture of it in the app, and it finds the item on the detail page. You can buy it one click. It's kind of magic. Externally, I would say it's kind of what I said earlier. You have AI labs, consuming lots and lots of capacity, both for training as well as for the inference and the research across what they're doing with their different applications and models. We see enterprises, all sorts of workloads, customer service automation, business process automation, fraud, completely reinventing their applications, agentic coding applications, legal applications. Suno is a really cool example of an AWS customer that's kind of reinvented how you can write music and build music. So really across the board. And I just think on the supply and demand, what I would tell you is, we're growing 24% year over year on a $142 billion annualized run rate business. So we're growing at really an unprecedented rate. Yet I think every provider would tell you, including us, that we could actually grow faster if we had all the supply that we could take. And so we are being incredibly scrappy around that. If you look, in the last 12 months, we added 3.9 gigawatts of power. Just for perspective, that's twice what we had in 2022 when we were an $80 billion annual run rate business. We expect to double it again by the end of 26.